Happy Monday, and it's me, Kateryna Coskundeniz with Keller Select and April Palacios with Fairway Independent Mortgage Corporation. And today we will talk about different mortgage programs such as FHA, conventional, USD, VA, and but she will definitely tell us something that I didn't tell you because I don't know.
So the basic programs that are out there is going to be what she mentioned. We have our conventional loans, we have our government loans, which is our VA, FHA, and then there's USDA. Now there are some alternative products, specialty products called non-conforming. That would be if you don't fit the standard requirements for a mortgage transaction, meaning that maybe you need to use the deposits on your bank statement to calculate your income versus using your tax returns, because maybe your tax returns did not show the income that would be necessary to help you qualify. So we do have a non-conforming product called a bank statement loan where we analyze your deposits over the last 12 months and come up with an income calculation. Now, there's also other products available if you're an investor and you're just wanting to simply use the cash flow that you'll get from that new investment property in order to qualify you to purchase the investment home versus having to use the standard debt to income ratio calculation.
Okay.
So we have our basic products and then we have our non-conforming specialty products. There's a multitude of different opportunities there. So as you're speaking with your real estate agent, if there is anything that seems like it might be a good fit for you, then we'll definitely explore that. So basic on your conventional loan products, I guess, maybe we go over what the minimum required down payment is and the minimum credit score.
Yeah, let's do like this. Yeah.
Okay, so conventional will let you put down as little as 3% if you're buying a primary home and you're a first-time home buyer, or 5% down if you're not a first-time home buyer, still buying a primary home at that point. If you fall within a certain income category, you could get access to putting down 3% even if you're not a first-time home buyer.
Okay. This is still with conventional loan.
Yeah, this is still with a conventional loan. If you're going to buy a home that is not going to be your primary and you're looking to maybe have a vacation home, a second home, somewhere you're going to live secondarily at some point throughout the year, then that one requires 10% down.
Okay.
And then if you're going to look at an investment property, you're going to look at that property as bringing in income. You're not going to stay there at any point in time. It is not going to be a first or a second home for you. That one has a minimum required of 15% down, but usually more beneficial if you put down 25%.
Okay, but
So
if it's 15, it's probably to change the rate.
Yes, yep,
Okay.
It changes the rate and the cost as far as what's offered there. Now, so conventional is going to cover that broad spectrum: primary home, secondary home, investment property. The other products are all going to be based on primary residence only. Okay. So FHA loan is a loan that allows you to put down 3.5%. That is the minimum across the board. This product is only used for purchasing a primary residence. They do have what's considered to be, you don't have to be a first-time home buyer. It can be anybody who's owned a home before, already owns a home, still owns a home now. It is not restricted to first-time home buyers. However, it is more beneficial for someone on a lower credit score range. Like, people typically get pre-approved for that more often than they do the conventional product. The USDA loan, that one has a 0% down payment required. And that one's also for primary residence. So you have to live in the house in order to get access to that program. There's restrictions on the location of the home for that one, as well as an income limitation. So you can only make up to a certain amount of money depending on where you're buying. So Kateryna has access to that information, and she will be able to let you know whether or not it looks like a good fit for you. And she can also put you in touch with me to run those numbers for you. Then the VA loan. That one is for veterans. So if you served in the military, are currently serving in the military, or if you qualify for eligibility through the VA by another means, being maybe you are a surviving spouse of a military service member who died with a service-connected related death, then you could potentially qualify for that VA home loan under that circumstance. So just broad overview spectrum, that's the basics of what's required out there. It's not enough time to kind of go over every single one in this, so we'll likely do some follow-up ones for you guys.
Yes, we just wanted to make one video and you will hear about all products that April can provide and think what is better better for your needs.
Yeah. So just because I did mention in the beginning, what are the minimum credit scores for each one? So going back to conventional will allow as little as a 620 credit score. 620. However, it does not guarantee that you'll get the loan at a 620 credit score. The credit score makes you eligible for consideration for the program or the product. Then we look at everything else and we have to determine whether or not the risk is accepted and if we can move forward with that or if we need to switch over to a different one.
Okay.
FHA and VA, we can go down to a 580 credit score. If you're looking to purchase on the USDA, they'll go down to a 620. And then if you're looking at the other products like the specialty ones, there's going to be a different requirement for every circumstance. So we certainly would want to look at that on an individual basis for you.
Okay, thank you, April, so much for this useful information. Thank you guys for following us. Have a great day.
Bye.
Bye.